If you've got $1,000 sitting in your account right now, and you're wondering whether that's even enough to start trading, give this the next few minutes, because it might change how you think about the whole thing. The real question was never whether $1,000 is enough. The real question is what you're planning to do with it. Picture two people. Both open a trading account on the same day, on the same platform, with the exact same $1,000. 6 months later, one of them has almost nothing left. The other one is still in the game, still trading, still growing, and more confident than ever. Same starting point, same amount of money. So why did their paths end up so different? I've watched hundreds of new traders go through this, and almost every time it comes down to the same mistake. People think what they need is the perfect chart pattern or the perfect indicator. But here's the truth, the market doesn't test your strategy first. It tests your head first. When that first loss hits, what do? When your account drops from $1,000 to $800, do you stay calm, or do you panic and make it worse? There's no secret formula in this script. No magic indicator that turns you into a millionaire overnight. What you're about to get is the approach that actually keeps a small account alive, because starting with $1,000 was never really about making money fast. It was about surviving long enough to learn. Get that part right, and this small account becomes the foundation everything else is built on. Get it wrong, and it won't matter how much bigger your next account is, you'll blow through that one too. By the end of this, you'll know exactly how much of your $1,000 you should never risk on a single trade, the one mental rule you need before you place your first trade, the single most expensive mistake new traders make, and why almost every successful trader focused on protecting their capital before they ever focused on growing it. Let's get into it. When someone asks me if $1,000 is enough to start trading, I don't hand them a stock pick or a strategy. I ask them one question instead. If your account dropped from $1,000 to $950 tomorrow, what would your first reaction be? Because that one answer tells me everything. Whether this person actually came here to learn, or whether they came here in a hurry to get rich. The market doesn't care whether you're trading with $1,000 or $1 million. It treats everyone the same way. The only real difference is that someone with a small account tends to treat every single trade like it's a make or break moment, like this one trade is going to change their life. That belief is exactly what gets people wiped out. Here's something I learned the hard way. Trading doesn't actually happen on the chart. It happens in your head. Until your mindset is in the right place, no strategy on earth is going to give you consistent results. If a small win makes you overconfident and a small loss makes you fearful, the problem was never the strategy. It's how you're processing what happens. Say you start with $1,000, and on day one you're already up $60. Your brain immediately says, I've got this figured out. If I made $60 today, I could make $200 tomorrow. That's the exact moment most beginners stop learning and start trying to outsmart the market. But the market isn't there to be beaten. It just hands out opportunities. What you do with them is on you. Now flip it. Day one you lose $50. That same brain now says, I need to get this back today. And that's how revenge trading starts. One bad decision leads to another. Position sizes creep up. Emotions take over. And before you know it, your small account gets even smaller. Here's something worth remembering. That $1,000 was never really your trading capital. Think of it as tuition. The price of your trading education. If you go in only chasing profit, there's a good chance it disappears fast. But if you use it to actually understand the market, sharpen your mindset, and make better decisions, that same $1,000 can become the foundation for real money down the road. A lot of new traders believe a small account means they need to take bigger risks just to move the needle faster. I believe the exact opposite. A small account means you need to be more careful, not less. Because if you blow through your capital early, you lose your chance to learn from it. The market will still be there tomorrow. Your capital might not be. So the first goal was never to make money. The first goal is to stay in the game. I've seen traders who barely made anything in their first 6 months, but they protected their capital the whole way through. A couple years later, those same people were trading consistently and profitably. I've also seen people post huge gains in their first month, only to lose the entire account weeks later because they had no discipline. A trader's success was never measured in a single day, a single week, or a single month. It's measured by how long they stay in the game while doing it right. If you're starting today with $1,000, make yourself a promise. I'm not here to get rich quick. I'm here to fix my mindset first. Every trade is a lesson, not a bet. I'm not chasing profits, I'm trusting the process. Because once the process is solid, the results start to follow on their own. When someone starts trading with $1,000, they usually assume their biggest enemy is picking the wrong stock, the wrong entry, or the wrong strategy. The truth is, your biggest enemy is your own mind. The market isn't trying to beat you, it's just holding up a mirror. And in that mirror, you see your mindset, your discipline, and how well you actually manage risk. Traders who make money consistently don't see each trade as a win or a loss. They see it as a probability. If you expect every single trade to be a winner, the first loss is going to shake you. But if you already accept that even a solid strategy loses sometimes, you stay level-headed. Say you pick a strategy that's proven itself over time, and your first 3 trades still lose. A beginner panics and switches strategies immediately. They go hunting for a new YouTube video, join another Discord, and start comparing themselves to strangers' screenshotted profits online. An experienced trader does something different. They open their trading journal first and ask, did I actually follow my own rules? If the answer is yes, they take the next trade with the same discipline, because they know one trade doesn't tell you anything. 100 trades do. Here's a mistake that shows up constantly. People look at how the last trade went and size the next one accordingly. Win last time? Go bigger. Lose last time? Go even bigger to try and get it back. But the market doesn't care what happened on your last trade. Every new trade is a fresh probability, completely separate from the last one. Tying them together is one of the most costly mental habits in trading. Your first job was never to grow your money. It's to improve the quality of your decisions. Bad decisions can wipe out a huge account. Good decisions can slowly grow even a tiny one. How much should you actually risk on one trade? Now for the single most important rule, the one thing that can protect a small account better than anything else. It's so simple that most people brush right past it, and so powerful that the traders who actually stick to it start standing out from everyone else. Your future in the market isn't decided by how much you make. It's decided by how well you protect what you already have. Say you've got $1,000. If you're risking $100 or $150 on a single trade, you're not really trading anymore. You're gambling. You might win once or twice, but over time that habit will wipe you out. On the other hand, if you're only risking a small slice of your account per trade, your account survives a string of losses. And as long as your account survives, you still have time to learn, adjust, and improve. That's why controlling your risk always comes before chasing profit. The profits will come on their own timeline. There are really only 3 things in your control: waiting for the right setup, deciding your risk ahead of time, and following your own rules without letting emotion take over. Everything else belongs to the market. Doubling down after a loss is the most expensive mistake you can make. After 2 losing trades in a row, a lot of people convince themselves that going bigger on the 3rd trade will make up for it in one shot. It sounds logical in the moment, but this is exactly where emotional trading takes over. Now you're not making decisions based on the chart. You're making decisions based on fear and frustration. In that state, you stop looking at the setup and start staring at your losses, and the moment your focus shifts to the loss itself, your judgment starts to break down. The strongest traders in this game aren't the ones with the biggest wins. They're the ones who don't break their own rules even when things get hard. If you take 4 losses in a row and still take the 5th trade with the exact same discipline, that's the moment your mindset is actually changing. And that's what keeps you consistent long term. Fast money versus long-term discipline. Picture 2 traders both starting with $1,000. One turns it into $1,500 in 5 days. The other is still sitting at $980 after 5 days. On the surface, the first one looks like the clear winner. But if that first trader got there without any real risk management and the second one is just quietly learning the rules, the picture can flip completely 6 months later. The first trader might have lost everything by then. The second one is still around, because they focused on fixing their behavior before chasing results. That's why the process matters more than anything else. The same rules, the same patience, the same discipline day after day. It sounds boring. But those boring habits are exactly what produce extraordinary results over time. If you need excitement every single day, the market is going to teach you a very expensive lesson. What to do when losses keep piling up. Say you've already learned to manage your risk. You're following your rules, and you're still losing trade after trade. Do you switch strategies, take a break, or just trust the process and keep going? Here's the truth. The market never promises that good analysis guarantees a winning trade. All it promises is that if your approach is sound and you stick with it long enough, the odds can eventually work in your favor. The biggest problem new traders run into is that they decide whether a strategy works before they've given probability enough time to play out. Say you take 5 trades and 3 of them lose. Your brain starts asking, is my strategy broken? Should I follow someone else instead? This is exactly where most people make their biggest mistake. They don't just question their strategy, they start questioning who they are as a trader. Their confidence takes the hit, not just their account. But a string of losses isn't proof that you're failing. A lot of the time, it's just your strategy going through a normal rough patch. Think of it the way you'd think about any real business. Sales aren't the same every single day, but a business doesn't rebuild its entire model every time revenue dips for a week. A serious trader doesn't rebuild their whole strategy after every loss either. They check whether they followed their own rules. If they did, they trust the process and keep moving. Stop comparing yourself to everyone else's screenshots. Scroll through social media and you'll see profit screenshots everywhere. Someone made a few $100s today. Someone else made thousands. It's easy to look at that and think you're falling behind. But ask yourself, are you seeing their whole journey? Are you seeing their losses too? Probably not. Comparing your progress to someone else's highlight reel is one of the most damaging habits you can pick up. Your only real competition is who you were yesterday. If your discipline today is better than it was yesterday, if your decisions are sharper than they were yesterday, you're moving in the right direction. For someone starting with $1,000, the real win isn't turning it into $1,500 in a month. The real win is that a month later, your account is still intact, your head is clear, and you trust your own rules more than you did when you started. What your first 90 days should actually look like. Here's the part that matters most. If you're starting today with $1,000 and you want to do this the right way, here's what your first 90 days should look like. First, write your rules down. Put it in a notes app or on paper. Be specific about exactly when you'll take a trade and exactly when you won't. Second, keep a trading journal after every single trade. Was the entry good? Was the risk decided beforehand? Did you follow your own rules or break them? Third, review your behavior every week, not just your results. Ask yourself how many times you broke your own rules this week, not just how much you made or lost. Fourth, don't trade off someone else's tip from a group chat or a social media post. Build your own understanding, even if it's slower at first. Fifth, at the end of every month, ask yourself just one question. Is my capital still intact, and is my thinking sharper than it was a month ago? If the answer is yes, you're on the right track, even if the profits are still small. The bottom line, if there's one thing to take away from all of this, it's that success in trading was never really about the size of your account. It's about the size of your thinking. Someone who starts with $1,000 can absolutely build something real, as long as they commit to learning every day, staying disciplined, and trusting a solid process. Nobody wins in the market every single time. But the people who keep learning are the ones who end up ahead. Write your rules down. Understand your emotions. Keep your risk small. Stop chasing profit, chase better decisions instead. Over time, the profit becomes the natural result of the better decisions you're already making. At the end of the day, the biggest win was never about beating someone else. It's about becoming a little better than you were yesterday. The right mindset is the one investment that pays you back for the rest of your life.